May profits be upon you. Welcome to another weekly market forecast. Like I did with the earlier videos, let me apologize for not having this out yesterday. I ran into technical and trading view issues. I could not complete the recording of a video even after I spent 15 minutes on it. It was driving me crazy. I had to keep doing them over, doing them, keep going, starting from the beginning. It was ridiculous. But today I'm running issue free. So again, I apologize for that, and we'll see if we can just get through this without a problem. Now, today we're looking at the S&P, the S&P, the NASDAQ, and a quick glance at the Dow. But let's start off with news. The news is that the way we open the market, U.S. picks a fight with its biggest creditor. We're talking about China, and China has just made a new deal with Canada, and Canada is seeking other, you know, business partners, and found the number one rival, right? And then you have, uh, Trump threatening new tariffs on the 8 NATO allies because of Greenland and his desire to want to possess it. And it's throwing the markets crazy. It's actually the effect it's having is the market is going to safe havens and taking money out of riskier assets. It's turning into a risk averse environment, and not good for the indices. Now, I want you to take a look at this. All right, we're looking at the S&P right now, the S&P futures. We're looking at futures contracts. All right, this is the monthly time frame. This is the weekly time frame. This is the uh, daily time frame and the 4 hour time frame, right? All right, you can see obviously we're making higher highs and higher lows, and it's bullish. But I want you to notice this here. It has been moving sideways, so it's bullish neutral. 1 2 weeks of bullish neutrality, moving sideways, down and up, down and up. We have these indecisive candles here, and we're making another one. This is probably going to reflect the same as the other two because we have a bank holiday in the US. All right, so banks are going to be trading. So, this is probably going to continue to move sideways. But we have news coming out this week. Is of course PCE, if I'm not mistaken. That'll happen on either Wednesday or Thursday. I'm not sure, but we have some news coming up, and that should give the market some direction. But what I want you to see is this uh, monthly candle here. If the market is to continue bullish, it cannot. I do not want to see it close past the 50% of that large wick. Okay. So far, last week, you see how it closed here without closing below that 50%. So if as long as we're trading above it, I'm staying bullish neutral. And as soon as we break out, then I can say, okay, we're back bullish. All right. It closed below this. I'm going to think it's neutral bearish, and I'm just going to stop looking for buys until it gets back up this way. You understand? That's the monthly. All right. So we're moving sideways on the monthly. You can see that on the weekly. Look, I want you to notice. Last week, we closed well within the range of the previous candle. This means consolidation. That's all it means. Okay. And we would be trading towards the low of the previous candle. We did trade towards that low, and but we closed again back within the range of the candle. But this week, we opened with a gap, as you can see here. It's a volume imbalance, right? And price is pushing down. All right. And we have already taken out the low of that candle that from 2 weeks ago. Okay. And that means we just took some sell side liquidity. on a day where there's no uh, red news folders for news drivers that'll move the market more. So and you see the reaction here. So is this where the market says, "Hey, we swept sell side liquidity here. We can start a movement back up to the top of the range, perhaps." But we still don't want to see the market close past that 50% of that large wick. Okay, that's weekly. Okay, if we go to the daily, you can see I have a line connected from this high to that high. Why? Why did I have that there? Because we have a divergence. All right, look at NQ, NASDAQ. That is a lower high. All right. What it illustrates is that one is weaker than the other, or Nasdaq being weaker than ES. All right, and uh, we can the way I look at S&T or smart money technique or divergence. When the markets start to diverge, there's an opportunity to take advantage of that move. Now, what I look at is, did the other indice, the third indice, Dow, did it also make a lower high, or did it make a higher high like S&P? Aha, it did make a higher high like the S&P. So what does that mean for the one that made the lower high? Probably, likely, it'll probably end up catching up to the other two. You understand? That's what I look for. All right. Now, another hint is is also here. All right. Uh, Let me get rid of this because it's distracting. You see this low here on the 2nd of January? It made a higher low here on the S&P. For the Dow, again, where is it at? January 2nd, higher low, right? NASDAQ, lower, a lower low. So what does that mean? I'm thinking that we're going to catch up. We're going to catch up with the others. A higher low would indicate strength, and this one should be catching up. I think we're going to trade towards this volume imbalance that the market opened up the weekend. Got it? All right. We go back to the S&P. All right. It doesn't need the other two don't need to make to take out this low for a liquidity sweep. It doesn't need to because NASDAQ already did it. You understand? Um, these two are looking to move up higher. The same way NASDAQ had a higher low here. It went down this way while the other two went up this way. It doesn't have to sweep that high like the other two did because they already did it. You understand? It'll likely catch up. I hope you can follow that logic. The sweep of liquidity was achieved on uh, the other indices. All right, so the odd one out usually follows suit, so follows the bias of the other two. Okay, we'll see. That's what happens more times than not. Okay, so S&P got a higher low here. All right. That means, look at this. Look at this low and then this high and then this break of market structure. That high was already taken, traded above. We made the high here and now we have a pullback. What am I looking for? That's why I had that what do you call this thing? The Fibonacci retracement tool out. All right. If we just join it up, I'm looking to measure that Fibonacci retracement, right? And I'm looking for price the pullback to OTE levels. What are the OTE levels? 618, 705, 786. Somewhere in this region, that's where I'm looking for price to come back to. All right, in this region. And look where we're at right now. We came down to the 786. We did not close down there. Right now, we're back up to the 705. I'm looking for this to continue higher. All right. Does it mean that we're going to the high? No, it doesn't. Not I can't tell that right now. All right. But I do like the fact that we're making a higher low. We're in an uptrend, so I am expecting. I have a reasonable expectation that we're going to go higher. I do believe that we're going to trade into this volume imbalance because there's no wick on this opening candle on the daily, on Monday's candle. There's no wick. There's a good chance the market may flip this bearish candle to a bullish one, and we might see some follow through coming up later on this week, on Wednesday and Thursday when we get the news out. All right. So as far as today is concerned, look at this. This is the higher low here. All right. Just like I just pointed out, NASDAQ made a lower low. All right. It doesn't need to, the need for a liquidity sweep is not there anymore. It took out the sell side liquidity. All right. And there's a good chance we may see it fuel the rest of the climb up. I'm expecting the market to move up into this 4 hour fair value gap. And if the 4 hour fails with this gap, the volume imbalance inside of it, if it fails, we're going to see a pullback and then up higher. I'm looking for a higher low in NASDAQ in order to achieve sweeping buy side liquidity and moving in the direction of the others. All right. But I'm looking for some bullish price action from this point. If we take out this low, that'll make it a, sorry, let me move this up a little bit. If we take out this low, and we close below that low after it's climbing up, that would mean a buy up with a stronger sell off. That would create an order block here, and I'd be looking for a pullback to it for more downward action, but downward bearish price action. But right now, I'm looking towards the market pulling up inside of this fair value gap, reacting to it, and then continuing up higher. All right, that's on NASDAQ. As far as the S&P, we already have the SMT, the divergence up here. We're already at 305, 705 on the Fibonacci retracement. We don't have a wick on this daily opening candle. We have a volume imbalance here. I'm looking for price to close that gap, trade towards it, and close that gap over the next couple of days. All right, that's it. That's it. All right, I'm not trading the Dow, so I don't trade Dow. I just use it as to measure for the other two. I hope you enjoyed this analysis. I hope you enjoyed the video, and I do urge you to go and look at the other three videos I put out today: silver, gold, and the pound USD. Yesterday, I put out the Euro USD and the US dollar index analysis. So be sure to go check those videos out. All right. And leave a comment and like or subscribe. And again, I urge you to make sure you check in with me during the week. Let me know real time. Give me some feedback on my analysis. And if you have any questions or you want to share something, give me a link for a trading view link for one of your charts and drop it in and say, what did I do wrong or what did I do right? You know what I mean? Just whatever, it doesn't matter because I'm going to respond to it anyway. Okay. I'll see you in the next video. May profits be upon you.